Good morning, everyone, and Happy New Year. I'm going to call the January 8th, 2020 Cape Fear Public Utility Authority Board meeting to order. First thing on our agenda is a roll call, and I need a motion to excuse Charlie Rivenbark, please.
So moved.
Second.
All in
And
favor
Kevin.
say aye.
And Kevin.
Oh, Kevin's not
Kevin,
here too.
but-
Okay,
Oh,
and
he's not.
and Kevin O'Grady. All right.
So moved.
Second.
All in favor say aye.
Aye.
Opposed? All right, we still have a quorum. Your agenda is in front of you, and I'll entertain a motion to adopt today's agenda.
So moved.
Second.
All in favor say aye.
Aye.
Those opposed? All right, and next on the agenda is the approval of the minutes.
The minutes from the December meeting are in the packet. Need a motion to approve.
Second.
All in favor say aye.
Aye.
Opposed? Okay,
I think we got excused so you can approve if you.
No, he shut
There's
up.
no excuse for me.
we do acknowledge that Commissioner O'Grady is here.
Only a minute late,
You're good.
Ms. Pope, do we have any speakers today?
No, sir.
All right, now we'll move on to a presentation. We have a presentation on Pump Station 10 sanitary sewer overflow. Frank.
This will be interesting.
Good morning. This presentation is an overview of a sanitary sewer overflow that occurred near Pump Station 10 on December 17th, 2019. The sanitary sewer overflow occurred at the Smith Creek Pump Station, or Pump Station 10, which is located on One Tree Hill Way, just north of the new Love Grove Bridge. Pump Station 10 is a regional pump station, and the service area is shown here in red. It receives flow from 6 other pump stations, and it's one of the authority's largest of our 150 stations. And you can see the service area is almost 13 square miles. It's bounded on the west by the Cape Fear River, generally on the east by College Road, Smith Creek to the north, and Oleander to the south. So approximately 9 o'clock Tuesday morning, December 17th, crews discovered SSO near the pump station, and the spill was stopped when a temporary bypass was placed in operation 12:55 early Thursday morning, December 19th. While the SSO was underway, the authority and contractor crews hauled 135 loads of sewer to the north side plant. That was more than 275,000 gallons of untreated wastewater. And contractors with tanker trucks intercepted and hauled an additional 250,000 gallons from upstream of the pump station site. The pump station remained operational throughout the event and continued to convey a portion of the flow to north side. However, 2.4 million gallons were released from the system and entered Smith Creek. The permanent repairs to the broken main were made on Monday, December 23rd, and the pump station was returned to service. And the temporary bypass pump station that we have on site there will remain in place until the new pump station adjacent to this site is completed. So this slide shows wastewater surfacing near the pump station. The pump and haul operations began within 1 hour after discovering the SSO. Our first priority was to isolate the broken portion of yard piping outside the pump station from the rest of the pressurized system. However, this was unsuccessful, and by about noon we were already making plans to construct a temporary pump station to pump these flows around the section of broken pipe into a new force main that was recently constructed as part of a new Pump Station 10 replacement project. The backhoe in the background here is building a berm around the northern side of the site so that it would to help us channel all the wastewater flow and allow us to recover more of that from the site. This slide was taken Wednesday morning, and you can see the berm had been completed. When this picture was taken, we were already underway with constructing a bypass pumping station to pump this flow around the site to Northside Plant. The HDPE, the high-density polyethylene force main piping, had been delivered Tuesday night, the night before, and fusing of that pipe had been underway since before daylight Wednesday morning. And we had we had both of the bypass pumps on site as well. And while we were building that, we were also continuing with efforts to try to isolate this broken portion of pipe, but we still were not successful throughout the day on Wednesday. This is one of the 5,800 gallon capacity tanker trucks, or two of them, that were used to haul wastewater from upstream of the pump station. And these were provided by Southeastern Response and Remediation. Ultimately, SR&R hauled 39 loads, which was about a little over 250,000 gallons. And this is an overview aerial of the site. You can see the Love Grove Bridge here, Smith Creek, and this is the pump station 10 that's been in service since the 70s. The new replacement pump station that's under construction is you can see here, and this pump station and force main system represents a little over $14 million investment, and this initiative to build this pump station has been underway since late 2014, 2015. And we're very fortunate that the force main from this from the new pump station has already been constructed. So we constructed the red line represents a 600-foot bypass pumping system that was installed to intercept the flow from our vintage pump station and direct that flow into the new force main that will be used by the new pump station. And this is a closer view of the bypass pumps and the manifold discharge pipe system that was built on site there. And this slide shows the bypass pipe being lifted into place. At this time, I think we had about 3 contractors working together to get this pipe across the T.A. Loving construction site where the new pump station is being built, and of course our bypass pump contractor, Xylem Pumps, and emergency response contractor, State Utility Construction. The slide on the left shows where the new bypass pipe was tapped and intercepted by the new force main that was recently constructed. And the slide on the right shows the bypass that was constructed across the construction site for the new pump station. And this bypass system was placed in service very early on Thursday morning, about 12:55 a.m. Once that was in place, once the bypass system was in place, the SSO, we were no longer releasing any sewer from our system, and the site could be dewatered, and we were able to excavate down and find that the top of the crown of the inside of the discharge pipe leaving the station had been deteriorated, likely from an air bubble, hydrogen sulfide gas bubble that's been in that force main. You can see that it was deteriorated. And so we began efforts to replace that pipe, and we also replaced a broken gate valve in the station yard piping. And these repairs were completed, and the permanent repairs to the pump station were completed, and the pump station was returned to service Monday, December 23rd. So response to this SSO included the contributions of several folks here that provided emergency services, state utility contractors, who's our emergency services contractor, T.A. Loving Company, who was constructing the new pump station 10 next to the old station, Cajun Construction and Rehabilitation, who provided pump and haul services, SR&R, who provided pump and haul using their tankers as well, and then Xylem Pump Rental, and the Rangeline Group, also not listed, but certainly it's noteworthy that we are appreciative of our staff, of course, and Department of Environmental Quality for their coordination and support, and our Department of Environmental Management for all the testing that was conducted during and following this event. So with that, I'd be happy to answer any questions. Yes, sir.
Would you go back to that slide where it showed the deteriorated pipe? Yeah. How old would you say that is?
That pipe has been in service since the early 70s.
Okay.
Is my best guess.
All right. So let's just say you said that it started December the 1917.
Yes, sir.
How much did that cost us to repair?
We don't know yet. We don't have all the bills in yet. Certainly, they're starting to come in from the contractors. Some of this work was force account work. The work that we had with our emergency services contractor, we have a basis for what those invoices will be, but we have not. We don't know what that final tabulation is at this point.
Okay.
And that force main's being replaced by the new pump station 10?
Yes, sir.
Is that in its entirety or just in that local area?
That force main has already been installed from the north side plant under Smith Creek in its entirety to the new pump station site.
Okay.
So that will be completely replaced. We're going to leave the existing force main that we have from our older pump station, so it could be operated, and we'll likely do some testing and rehabilitation work on that. So we'll have dual force mains from the new pump station 10 moving forward.
But this old pipe is going to be replaced? I mean, it's
Yes, sir.
essentially.
It'll be abandoned. It'll be eliminated through construction of the new station.
Okay.
So, do you know when the last time that pipe had been inspected, or would that have been a normal part of our surveillance?
It is. I know that there had been some improvements made in the late 90s at the station following hurricanes Bertha and Fran, I believe.
Yeah.
And we had also, since the authority's been formed, done some ultrasonic testing on the pipe in areas we thought were most likely to have gas bubbles. So we had done work on it, and we found it was in good shape, but we did not test this exact section right next to the pump station.
Frank, you mentioned in the discussion there was a broken gate valve. Did that factor into this, in either what happened or the response?
I think that was a contributing factor that prevented us from, partially was part of the reason we were prevented from being able to isolate this broken section of force main.
And were we aware of the broken gate valve?
No, sir.
You didn't, so we had the problem, somebody ran over and tried to run it and the thing didn't work, correct?
It did turn, but it wouldn't seat all the way. So.
You know, and where, Frank, the irony, I know does not escape you, that it was just last month or so, we were talking again about the matrix of repair and trying to get ahead of this stuff. Did any of this area fall, where does it fall on that matrix?
It falls very high on that matrix. As a matter of fact, that's why the new pump station was prioritized to be constructed several years ago. Of course, with a $14 million expenditure, it takes time to get it constructed. That pump station can be online as early as April of this year. So
Wow.
we
Just missed it.
just missed it.
And you mentioned in your rundown that the new work was begun in 2015. Did I hear that right?
Yes, sir. That's when we originally started the design for the new force main that will be
Right.
utilized by the new pump station, and started the preliminary environmental work on building the new pump station.
It's unusual to take 4 to 5 years from design to finish for a new pump station?
Well, when you have a project that includes environmental work up front, and then, the preliminary final design, not for a $14 million project necessarily.
I'm assuming the DEQ has been kept in the loop on this, correct?
Absolutely. They were on site the both days, the Tuesday and Wednesday. They had quite a group on site monitoring the work that was going on.
So, Frank, what's the protocol for water testing for Smith Creek from this point forward? And then the second question, should we use the parameters of what we've learned to target some other high risk areas that we might want to sort of proactively go after a little more aggressively to screen them?
Yes, we followed the direction of the state as far as our upstream and downstream water quality testing, and so that by Christmas, by about December 23rd, the creek was back to background levels, and so the testing was no longer needed. And as far as lessons learned from this event, certainly there are some things that we've already started to talk about. How do we get and we are going to be doing a internal, hot wash on this to try to find out what we can, learn from all the folks that were involved, so we can, implement better practices moving forward.
Well, I'd just like to take Jessica's question a little further. Do we have other pump stations of similar age?
We do, yes, sir.
That are they all planned for repair or replacement?
They are all being evaluated and prioritized to be included in the capital program for rehabilitation or replacement.
Okay. So they're not in the plan yet?
They're all either, they're every year as we go through the capital prioritization process, we take a look at where we think our most risk lies, and we prioritize our projects to eliminate that risk on a priority basis.
Okay, when do you think we might see that appraisal?
The long-range planning, we'll be seeing it this month, I believe.
Okay, good.
Frank, this is detail, but I noticed in all the photos, none of the workmen seem to have any kind of gas mask or something on. The smell must have been horrendous. And they're there working, as you pointed out, probably 10, 12-hour days. How you explain that to me?
Yes, there definitely was background odor. It, was worse there at the site, but it did, migrate away from the site as well. It was in the ambient in the air there. Yes, ma'am.
DEQ issued any notices?
Not yet.
Not yet. Are we expecting
Yes,
anything?
ma'am. We'll expect a notice of violation
Okay.
from DEQ. We did receive one from the city of Wilmington.
We did? Okay.
We did.
It doesn't seem like a very likely place to have a bubble. Is that just a very hot spot in the line?
It was a localized high spot. We really didn't know it was a localized high spot as the pipe comes up inside the dry well in the pump station. The force main comes up and then it comes out of the pump station. Once it leaves this pipe header that's just outside the station, that force main was taking a dive. So it was definitely a localized high spot there, and something, really you wouldn't expect without seeing it.
Frank, the force main didn't burst completely. Do you have a sense of what proportion was lost through that break and what proportion of flow continued on through the force main and made it to the plant?
It's about half that we think made it to the plant. So everything we were pumping off the site and upstream of the site minimized the amount that was being released.
Without digging up the entire force main, how do you even look to see if you've got a problem?
Well,
I don't know how that would have shown up.
There's several ways non-detective testing, non-destructive testing that can be done. You can do ultrasonic thickness testing, as Jim mentioned.
Okay.
You can also look at as-built drawings to find these localized high spots and, prioritize those to take a look at and see if you can detect any deterioration or thinning of the pipe material.
So that was kind of what I was asking you. Are we gonna go and do that?
We may do that as part of our Find It, Fix It program, our rehabilitation program. That's something that we've done in the past on pipes, and we may incorporate that into our Find It, Fix It program. But we'll certainly be considering that moving forward, based on what we've seen here.
Frank, I'm sure also that we're going to go about and check our other gate valves in critical areas as well.
In critical areas where we can close those gate valves and operate those gate valves, we will do that. We have to be, we're going to be very careful as to how we do that. And you cannot operate, maybe it might not be in your best interest to operate all those gate valves. You may close one and not be able to open it, especially one that's been in place for so long. We know from experience they can spin off those gates. But where we can operate gate valves and have confidence that we're not going to cause ourselves, a major problem, we will do that. Yes, sir.
Is the piping that seems out of place at 21st and Market, that's running through that park along that Burnt Mill Creek right there, is that a part of that leak process? What's going on over there?
Yes, sir. That is the upstream. That piping is upstream of this pump station. That comes through, I believe that's the park.
Wallace
there,
Park or something like that.
Maids Park or Wallace Park.
Wallace Park. At 21st and Market. Right by the National Cemetery. Right across the street, that crazy intersection right there.
So that is the gravity outfall that's headed to this pump station.
Okay.
And the reason it's above the ground, that's a low area. It's the piping has to be sloped so that we can, that the gravity will pull the sewer through the pipe, and so the gravity is, it's on top of the ground in that low area. The concrete blocks you see on that pipe actually hold it down when the area is flooded, when the park is flooded.
Yeah, it floods over there quite often.
Any more questions? All right, Frank, thank you so much.
I'd just like to point out too that Frank and all of the city crew or authority crews did an outstanding job. It was difficult circumstances, dangerous circumstances, and they worked around the clock, and it was sometime in the middle of the night when they actually got the new force main in service. So they were working around the clock on this, and it's something all of us take very seriously.
Thank you, Jim. All right, that brings us to our consent agenda. We have 4 items on consent agenda this morning.
Move to approve?
Second.
All in favor, say aye.
Aye.
Opposed? All right. New business, our attorney's report. Linda?
I don't have anything today or closed session.
Hallelujah. Merry Christmas.
Yeah.
That's right.
Happy New Year.
Happy New Year. Don't expect it. Every meeting.
Yeah.
Executive
exactly.
Director's report. Jim?
Thank you. The key indicators, environmental, and quarterly CIP report are in your board book. The safety report was not included because the holidays didn't come together, but it was sent by email yesterday and is also on the table today. So if there are any questions about those reports, staff and I would be glad to answer them.
Maybe it's going to come through John's report there. The key indicator, I guess, page 8 of this, the debt to capitalization ratio, any kind of uptick in that, if there's an explanation? Sure. Would that be a part, if that's a part, maybe I ahead of myself then. That's caught my eye.
We'll cover that under the finance report and take care of it that way.
All right. Thank you, Jim. Move on to committee reports. Executive committee met on January 2nd. The minutes from that meeting are in your packet. If there's no questions, we'll move on to long-range planning.
Yes, the minutes of the December 19th meeting are in your packet, and we've got a recommendation for approval of an ordinance change for ownership pump station parcels. Do we have a Carl, do we have a presentation?
I can briefly cover that.
Okay.
Good morning. This particular item it's a little bit of a cleanup of our ordinance with respect to conveyance of pump stations in fee simple ownership. We have 150 pump stations, and historically, some of them were conveyed to the authority in the past, in an easement where the authority does not own the underlying land underneath the pump station. That's a little bit of a leftover from the past. Our current practices and policies are that if a pump station is conveyed to the authority for public ownership, then the land has to be conveyed fee simple. So this particular ordinance change that was in the attachment clarifies that where the parcel upon which the pump station is constructed shall be conveyed fee simple to the authority, provided that the parcel is consistent with subdivision regulations and land use ordinances. So there's, sometimes there are some unique circumstances where that may not be possible. But it is consistent with our current policies and practices that we've been used for years. It's just to clarify it in our ordinance. I'll be happy to answer any questions.
This comes from long-range
Long-range
planning.
planning, and I would make a motion to approve.
Second.
All in favor, say aye.
Aye.
Opposed? All right.
Okay, Finance Committee met last week. The minutes from our January 2nd meeting are in your packet for review. There's no questions on that. John can start with the financial report.
Good morning, and I'd like to just preface the presentation this month with this is the first month where we're seeing the bond proceeds and the issuance of debt that we just did back in November reflected in these numbers. So as Commissioner Zappel pointed out, there's some effects on some of our different indicators and obviously our year-to-date revenues and our expenditures. So this is our look at the change in total fund balance year-to-date. This is through November 30th. And you can see that our change in total fund balance is $53 million. Now that reflects the issuance of the new money issuance of debt that we did for the Sweeney and the Raw Waterline projects. As you can see, this number over here, the change in fund balance on the capital side, so on the right-hand side over here, that almost $57 million reflects that $58.4 million in new money that we issued to fund those two projects. Those funds are restricted and they are backed out. You can see there's a line item there, less unspent bond proceeds of $58.4 million. We have not spent any of those monies yet, especially as of November 30th. So that full amount is being backed out there. That brings our total unrestricted fund balance system-wide to around $79 million, and that's a decrease from the prior month. One thing you might note over here is this change in fund balance on the operating side. So on the left-hand side, you can see that $3,825,204 that reflects that our expenditures have exceeded our revenues year to date or through November 30th, and that's really driven by that transfers to the capital funds. You can see up top there on the operating revenues where we're backing out the operating revenues that are being transferred over to the capital fund to provide that PAYGO funding source during the year. That's a pretty substantial number given where we are through the year. So 5 months through the year, almost 42% through the year, and we are, we've spent $12.5 million out of $18 million. So that's, well over half of that number, more around like 75% or so. So that obviously that's just a timing difference there, so no cause for concern there. Any questions on this? And I meant this month to start including some numbers for these rows, so I can point those out. I know it's probably hard to follow, especially I don't have my little laser pointer today, so I apologize for that. This is our look at our water and wastewater volume and fixed charges, those main drivers, so the consumption and then how many customers we have. You can see that continued trend of outperformance on the volume side and on the fixed side for both water and wastewater. We have more customers than we anticipated in the budget, and we also have more consumption per customer on both the water and the wastewater side. I will say we have this little look here. Let me flip to this one real quick. You can see that we have that, kind of that first month, or this is the first month in a while, so December of 19, where the consumption for sewer and water per ERU for this past December was less than the December before. So that month that fell off and the month that we gained, this month that we gained this time was less than that month that fell off. This is a rolling average. So you can see it's continued to climb, and this is the first month that it's kind of ticked down a little bit. I've kind of been anticipating when that would happen, and that was reflected this past month in December. As far as our number of customers go, you can see it's steady. This is a kind of a 3-year look back, and that's a pretty steady slope there, pretty consistent. And we will be trying to really factor in the growth in our customers when coming up with those assumptions that we reflected in the fiscal year 21 budget that we're starting to get into in the next couple of months. Let's see. This is our PFAS look. Around $10 million that we've spent incident to date. And all but about $606,000 or so has been funded by ratepayers. One more thing that I wanted to point out to, and well, I guess I'll just talk and I won't point out to any specific line. But if you'll remember, we had some discussions as part of the FY20 budget development process where we had some discussions around how we handled biosolids. And we had taken $1.5 million from that $18 million PAYGO appropriation and given it over to kind of that operating category to fund landfilling the biosolids rather than land applying. I want to tell you that we have, through a couple of things, there are some savings when we did the refunding, when we did this last bond issuance, and then also the change in approach that we have now. We've taken that in-house, the biosolids that used to be contracted out, so there's been some savings there. But we've made that whole. I'll go ahead and point it out here. It's right here. Oh, thank you so much. You're welcome. Step over this. So you see, this is the original budget was the 16.5 for the transfers. It's now been made whole to that $18 million target. So I just wanted to point that out, that we've kind of filled that gap there. As far as our other revenues go, we talked about the water and wastewater revenues earlier in that previous slide. Lagging slightly on our investment earnings. It's kind of been a volatile time in the fixed income market. SDCs, again, very, very strong. I think we're kind of anticipating a slowdown during this fiscal year, and we just haven't seen it yet. And then looking great on our other revenues here, in line. We're 50% through the year and over 50% in our collections there. So any questions? Oh, and Commissioner Zappel, yes. Well, I don't know if we can bring it up. Can we bring up the key indicators? I'll go ahead and get started, but yeah, on the key indicators, our debt to capitalization ratio, which is our debt limit, is phrased in terms of that ratio, and what it is, it's our outstanding debt balance compared to our depreciated historical cost of our capital assets, so the value of our system. And there was a tick up this past month, and that's due to the new debt that we issued. So that numerator is going up because we issued more debt. And I think it's just a couple more down, just so we can point it out. One more. This one right here, yeah, this is what we're talking about here. So you can kind of see it's been declining as we've been paying debt off, and then, you know, it kind of shot up here. And that's because this number, this outstanding debt number, went up. So. Any other questions?
As we build the projects out, that will begin to right side.
That's exactly right. So what you'll see is this number go up, the denominator go up as we invest it, and then also as we pay off the principal, this will go down. So over time it'll start to decrease. Correct.
This is totally anticipated by yourself.
Correct. And yeah, you can still see there's room under here. So that means extra debt capacity. We do have so the capacity to issue additional debt before we would reach that 45% limit. I think it's probably around it's between $30 and $40 million is what this gap is.
John, could you elaborate a little bit on the SDC charges? You know, we were 50% through the year on that particular column, and yet we're seeing, in comparison to the actuals and budgeted, about 75 or 0.79%
Sure.
Of that. That number is huge, and if we continue on that pace, we're going to have a lot of SDCs coming in.
That's right.
And so could you?
Yeah, it's very difficult. We have this kind of contrast with when we forecast our water and wastewater rate revenues. We have data on number of customers. We have data on consumption per customer that we can kind of look back at. The SDCs is really, a function of development, and which is a function of the economy, and it's very difficult to predict that in a given year. So what will happen with these is those will be manifested in the year-end surplus, which we will then park in a capital reserve to reduce debt that we otherwise would have issued. So there's kind of a mechanism to square these things up and to kind of pass savings on to our ratepayers in that way. But as far as the kind of the equity concerns maybe there, we're developing more, meaning that more new customers are connecting, and so we're basically passing a rebate on to our customers that had paid for that infrastructure in the past, and that doesn't really change, or it's not really a function of if we over collect or under collect compared to budget.
And tied to that also, I know going back a year, I think really to almost this meeting, or maybe a little bit, maybe it's a February meeting, discussion about ERUs. As we see that continue to grow as well. Is there some, and I remember at that time, it was too late in the budget process for it to make any kind of adjustment. Do you have any thoughts on that, considering the numbers have continued in the same kind of upward slope?
Right. I'm gonna take a very critical, and I won't say aggressive, approach to forecasting those ERUs, but it's kind of been a trend the past few years where we've missed. We've kind of undershot on the number of ERUs, so kind of under forecasting the growth in new customers. So that's something that we're very aware of, and especially in a year that rates will likely have to go up. This is for FY21 to to pay for the new debt service requirements that are coming on board from the new bond issue. So it's something that we're going to be taking a very, very, very close look at, and really trying to do our best job and getting that crystal ball out and trying to forecast those things.
I think, John, everything is looking, certainly in the county-wide and region-wide, for continued growth and robust growth. And population moving here to New Hanover County is, again, our whole region. So I think there's reason to anticipate this kind of upward trend.
Sure.
John, can I just ask you for a refresher? So can you tell us in layman's terms how the SDCs are sort of calculated, what the philosophy is in the setting of aging infrastructure, in the setting of rapid growth,
Sure.
in the setting of fairness of who's been here for 20 years and who's going to move here next year?
Right. So I guess I'll preface it. So there's two kind of allowable methods in statute to calculate the SDCs. Well, there's actually three. There's one that looks forward, so you can collect an SDC to fund future projects to accommodate that growth. There's a kind of a look-back method or buy-in method that compensates past ratepayers for investments that they've made that will benefit the new customers. And then there's a hybrid approach. We take that second method where it's a pure buyback. So what we basically try to do is we take our current ratepayers' equity, in the system, in the value of the system. And so what we do is we start with the depreciated value of our system. We back out outstanding debt, because that's going to be recovered in future years through future rates when that debt service comes due. We back out any conveyed assets, that have been conveyed to us from developers, and then we also back out things that were funded with grants. There were non-ratepayer funded, so grants, contributions from the city, county, those types of things, and so that's our base. And then what we do is we allocate that over the ERUs that are projected for the next year to get kind of a per customer share of that equity, and that's what the SDC is. And so what it's really doing is so if the SDC wasn't there, that would create a revenue gap that would have to be made up through rates. So rates aren't going up as much as they would have when that SDC, when we collect those SDCs. So that's kind of the philosophy with that buy-in method. It's reimbursing past ratepayers for investments they made that benefit new customers.
Perfect. Thank you so much.
Well, there's one more part of it that has to be published.
Right.
Yes.
So that,
Hearing.
there's a timing issue. That was the issue we had last year. We had
Right.
published the number,
Right.
and then things started to look better or worse. whichever.
Yeah. So
And we
Don't we
couldn't,
just have to
and
pick
we
a
couldn't
time, though?
adjust it. Yeah,
Right.
we had to pick a time.
Once a year, pick a time, forecast as best we can.
Right. Well, and so the approach in prior years has been what I've done is I would look at the ERUs that we have experienced, year to date, as of about this time or the end of next month. Now, what that's done is we've undershot. We've undershot because we've seen that as we go into the next year, our customers are growing beyond what we anticipated. So that's what I was saying. We're going to try to really get on top of that estimate and kind of change the approach from locking in the ERUs that we've experienced year to date as of the end of January or the end of February to really trying to project out what's kind of a weighted average number of ERUs that we expect to experience in FY21.
Got it.
John, I think it'd be helpful too, for anyone who listens to this conversation, if we can see where does that boil down to? We're talking about in theory and these wonderful charts, which are great, but to the ratepayer or somebody who's building a house, how does that SDC affect their lives? It comes down to, a number, that they have to pay if they want to tie into our system.
Mm-hmm.
And what is that number today? Do we know?
What's
For a single family house?
What's that? What's the SDC? What
Yeah,
were the SDCs?
right.
Oh, I think it's $1,880 for water and $1,930 for sewer, I believe, and then that's obviously scaled based on meter size.
Right.
So it's scaled up all the way to what, a 10-inch meter or 12-inch meter. I don't know how large we go.
So
That's
is
per
that-
year?
And
That's-
state law.
No,
and-
it's a
One-time.
Yeah,
one-time
it's a
charge,
one-time
a
charge.
one-time buy-in charge.
Okay, okay.
That's your tap fee,
The
essentially.
tablet,
Yeah.
okay, I got you.
And state law and case law is very clear on how you should do this formula.
But it starts with our formula that,
Right.
that we lay in there. Is it, Frank, is that right, about 18 and 1900?
Those are right.
They are, okay.
Yeah,
Thank you.
and we hear from, I frequently hear from people, particularly nonprofits and churches, that the number's too high. But the fact is, you're buying into a very valuable system.
Mhm.
And all the people before you paid for that.
There are other systems where the rates have gone up almost exponentially. And we're, you know, with a water meter, with irrigation, you're about this for a half, 4,000 for a house. And that's remained flat the last number of years. Now you go into Brunswick County, in some places, 25, 50% increase. In Southport, it went up to $8,000, I think $8,000.
Tap
Yeah.
in?
That's exactly what I'm after, though. I think we've got a good story to tell. I just want to make sure that we can, at any time, go back and point directly to this. And the fact that it's remained flat for so long is good.
Building community hasn't been complaining for the last couple of years.
It's the homeowner that I hear from.
Well, and overshooting's not a bad thing, because we're just collecting those revenues a little bit earlier, especially with the, the increase in the ERUs. We're collecting those revenues now as opposed to when we expected that growth to occur down the road.
Sure.
So that's reducing what we have to finance for the future, which I guess reduces those SDCs down the road. So it's, being conservative is not a bad thing here.
Balance that, Larry, though, against, in theory, again, what the common person says is that the larger the pool, the larger the number of ratepayers, in theory, the overall number should be coming down or should flatten. So that's the kind of the disconnect, out in the public. Even though we're building our system more, as we have more and more people come online, you would think that we would see those rates come down and things like SDCs would come down, exponentially. But that's at the root of this discussion here. Why isn't that happening? And I think the case is made strongly by John, is that we continue to invest in the system to make it better and better.
And your rates are not going up as high as they would, so you're
Yeah.
you're not going to see rates necessarily go down, but you're going to see a reduction in the rate increase with debt going down. Because debt is the biggest driver of rates.
Yeah, like you mentioned, and all these other municipalities, they're trying to catch up right now. And it's just people are going.
He's taking a scientific approach, and some of these municipalities, they're getting what the law and sometimes what the law doesn't allow.
Yeah, yeah.
You saw the news of Pender County, is it yesterday or the day before? $124 million short of being able to deliver their water.
Mm-hmm. Yeah,
We're not having that kind of discussion here.
that's right. And they're proportional too. I mean, the more people are here, the more demands on the system, the more we're building, the more this. I think I think this approach levels it out where nobody's getting surprises, which nobody wants a surprise.
Thank you, John.
Thank you.
Thank you, John.
Right. Next up, Ms. Iris got the customer service, quarterly customer service. Sure.
Yeah.
Good morning and Happy New Year. All right, I'll make this really short and sweet. In December, we saw quite a few more calls come in, despite the fact that we were closed for 3 days. We also saw the number of calls being handled go up, and likewise, the service level did go up, which we were happy to see. And we're still about a little bit below where we'd like to be, but we're still able to handle all of the customer calls as they're coming in. Call volume, again, was up, but what was kind of interesting is in December, we also saw an equal number of outbound calls and emails going out, so we did almost as many outbound communications as we did for those actually coming into the call center. Call disposition remains about the same, with the majority of them coming in just for account inquiries and payment inquiries and new service inquiries. We're seeing a lot of movement right now in the customers moving in and out, which is kind of unusual for this time of year. We see it a lot in the late spring and late summer as students are moving in and out, but we've seen a lot of movement in December for some reason. Total adjustments did go down slightly. We're starting to see some of those summer irrigation, high usage adjustments tapering off. And we haven't had any, we haven't seen any sort of weather-related situations that would cause some of those adjustments to bump back up. Outstanding charges, outstanding receivables are about the same, where we would anticipate them to be no changes there. And just the regular customer service update information. The only thing I really wanted to draw your attention to was the average answer time appears to have gone up pretty significantly. We are seeing, because we do have virtual hold, the way that it's counting the time that the customer is on hold is a little differently. So, they do have a period of time where they're in the call queue. And then when they opt to go into virtual hold, meaning that, we call them back when a representative is available to help them, it will start counting that average answer or that time to answer from the time that the system actually starts reaching back out to the customer for them to accept our call back to assist them. So it's kind of exaggerated on that end. And we're trying to figure out whether or not there's another way that can be represented. So if you see that number has gone up, that's why that looks a little inflated over what's been in the past. And with that, I will stand for any questions you may have. Good. Thank you.
Thank you. Lastly, we have one item from the Finance Committee agenda. Carl, you want to present?
This particular item is a utility infrastructure reimbursement agreement with River Bluffs Development Corporation. The River Bluffs developers is going to construct, or they're going to fund and construct, a new water line from Castle Hayne Road along Chair Road to their development. In doing so, they will not only provide water capacity for their development, but also excess capacity that can benefit future development. And since this particular developer is funding the entire project with their cash, they are eligible to be reimbursed from future developers that will will use that additional capacity that is being created. The authority will manage the collection of capacity fees and monies that are collected through that from future benefiting developers and reimburse the developer accordingly for their proportionate shares. So there's no cost to the authority. I think it's a good story that development is adding more capacity for other developers in the system, and they're getting reimbursed for doing that accordingly.
Carl, thanks for that. I was the one on the committee that asked this be brought forward for a couple of reasons. One, I think it's such a good story to tell and to make sure that everybody knows it, but also this answers a complaint, I guess I'd call it, that is, since I've been in elected office, I've been hearing from the people who live along Chair Road, which is primarily an African-American community, been there, and I've met with them several times there, and their complaint has been that they have not had access, even though River Bluffs down the way has had access to water. This is a great news and great day for CFPUA and for that community to be able to tie in, and I'm really delighted about this project. And I think there'll be a lot of people jumping in to take advantage of this and bringing water down that area.
And if I may add to that, Mr. Zappel, that existing residential structures will not have to pay that capacity fee. That is something that has been embodied in our ordinance for many years. So if there's an existing structure there, they'd like to tie into that new water main, they do not have to pay that capacity fee. Only new development has to pay the capacity fee.
Even better.
Sure is.
Finance Committee moves the item.
Second.
All in favor, say aye.
Aye.
Opposed? All right. Any old business? That pretty much brings us to the end of our agenda today. Yes, sir.
I just have one comment. I didn't think about it earlier, but I think it's important with the SSO. I mean, there has been, this pipe was put in the 70s, but there has been a tremendous amount of work Carl, Jim, and staff have put in on the new specifications, making sure that, any new materials out there that are better to install in the system. There has been a ton of effort to make sure these things don't happen in the future. I just think it's worth bringing up because, a lot of people don't like to pay for it. It is expensive on these pump stations. They are, but they're built to last, and they're built to not have these problems in the future. So I think it's just a good point. There's a lot of effort to make sure these things don't occur in the future.
Thanks for those comments, Les. Appreciate it.
Mr. Chair,
Yes,
I had one follow-up item that I missed. I was on the, my page 77. It had to do with the finance report. There's a contract change order for janitorial that doubled the amount that we're paying, and it was noted as $235. I was just wondering if there was, what the reasoning behind it. It looked like it was a contract that was now, with the contract change, has been doubled.
I think what we've seen in the past little bit is not a lot of interest when we put that out to bid, and that's what's kind of driving that pricing there. I'm not sure on the kind of exact specifics. There was a discussion I had with Julia Faircloth, who's our procurement manager, who's in charge of bidding those things out. But yeah, it's kind of a reflection on, the interest that we used to see and the interest that we have now. And so it's kind of reflected in that.
What is janitorial 235? Is that the building there?
The admin building.
Admin building.
Jim?
And it could be we just extended the contract, which is why it's doubling the amount, might be another year, but we will verify what that is and send something out to the board this afternoon.
Great. Thanks, Jim. Thanks, Jim.
Any more questions? All right, I will entertain a motion to adjourn.
So,
All in favor, say aye.
Aye.
Opposed? Thank you so much for being here today.